ladies and gentlemen, how are you? I hope everyone is okay. Today's session we are going to continue to start about the advanced financial management. Here I have questions we are going to look about. The question that can be asked in an exam or in assessment. So here the first question is about, they say that a project may be regarded as a high risk project when there is a answer to be selected. A, they say that it have a small variance of outcome but a high initial investment. B, it has large variance of outcome and high initial investment. It has a small variance of outcome and a low initial investment. It has a large variance of outcome and low initial investment. So here the answer is the A, because a project may be regarded as a higher risk when it has a smaller variance of outcome, meaning that the outcome is a small but you have invested a large amount of money. That is the project that have a higher risk. For the second question, a risk associated with the project and the way considered by well diversified stockholder is classified as, you have to select in this. They said that the first A, it is expected risk, beta risk, industrial risk, returning risk. Here the answer is B, because beta risk, it is an instrument that used to measuring the risk that will associate the project. Here a risk associated with the project and the way considered by a well diversified stockholder is classified as a beta risk. Let's go about the number 3. For question 3, they give you a scenario where they say that ABC company has share capital made up of 15 shares of 5 million. They have just paid a dividend per share of 50 and pay a dividend per share 4 years ago of 35. The cost of capital is 14. Calculate the value of business by using dividend valuation. Here the answer, it is for C. Let's continue about the question 4, where they give you that an investment outlay cash flow is 4 million, operating cash flow is 1,000, and salvage cash flow is 5,000. Then free cash flow would be at 10,000. So as you know, free cash flow equal to revenue minus cost minus investment. That's why it is equal to 10,000. An operating cash flow for question 5 say that an operating cash flow is 12,000 and the gross fixed asset expenditure is 5. The free cash flow would be 7,000, where I say that you take revenue minus cost minus initial investment. It's why it is called 7,000. For question 6, company Alpha is financed with 1,000 of equity and 4,000 of debts, and indeed to undertake a project is an unrelated industry. They have identified the horizon company as a company in the new industry with 7 of equity and 300 of debt. Alpha company has beta of 1.3, whereas Horizon has a beta of 1.2. The risk-free rate is 4%, and the average return on market is 12. The tax rate is 30%, which therefore will be a project specified as discount rate for Alpha company when you entered the new industry, meaning that the answer will be this 13.4.2, where we shall study about this how the gearing is, and I will show you how to calculate this. That's why I show you these questions before to see the next lesson we are going to study. The cost for question 7 say that the cost of capital is equal to required return rate on equity in the case of investor are only. Here they say the cost of capital is equal to the required return rate on equity. Here meaning that if you are invested in equity, you are going to get a return from the common stockholder. If you are a common stockholder, meaning that you are going to get a return on your equity. That's why it is a B. For question number 8, they say that the following is OR, a method of adjustment of the risk. Select the one. Here, the risk adjusted the discount rate, risk equivalent coefficient method. Here, all these methods are used, meaning that A and B are used. For question number 9, they say that the free cash flow is 12, and operating cash is 4,000, and investment outlay is 5,000. Then the salvage will follow will be 3,000. As this answer is shown because they have got the free cash flow, which is equal to revenue minus the cost minus initial investment. For question number 10, they say that the free cash flow is 15,000, and the net investment in operating capital is 9,000. Then the net operating profit after tax will be 24. Meaning that they give you a free cash flow, and also they give you operating capital. They are asking you the operating profit. Here you have to use formula of free cash flow, where they say that the free cash flow is equal to revenue minus the cost minus investment. This is a formula which are using to calculate all question related to calculating free cash flow, cost of to calculate the cost, to calculate the revenue, to calculate the initial outlay. That's why. So thank you for today. Remember to subscribe, like, and share for others. Thank you very much. My God bless you. My God bless you.